lunch. I had a great time. I ate salmon, biryani, and a little bit sleepy, so I'll try to wake you guys up. Huh? No, I had salmon and biryani, not the vegetarian. I'm not the vegetarian for sure. So what I'm trying to do is, the slides are up. I'm trying to give a brief summary of the oil price, but what people are doing is they're looking at the last 10 years. Last 10 years, but we should also look back. The research that's happening is only 10 years. We should also look back. So the first graph just shows that in the last 15 years what has happened, and the bottom one is last 50 years, 50, 60 years, what has happened. And of course, this is being a little bit of technical, but if we adjust real and nominal, adjust the prices to today's dollar terms, you will see the red line. So everyone thinks the oil price decline of today, what happened in 2014 up until now, is new. This happened in 85, 84 to 86. So it's nothing new. This happened before. So just 30, 40 years ago, we had a similar incident. And then if you look at the graph carefully, you will see that the oil price is really highly affected by geopolitical events. Iran-Iraq war, oil embargo, Asian crisis. All this points out that oil can be manipulated by the political events. And if we leave everything on its own, go back. If we leave everything on its own, so it could be somewhere around 35, 40. So you could have an oil price of hanging around 35, 40 for 10, 15 years. So just explaining the 84 to 86 decline and 2014 to 2016 decline, they're highly similar in structure. They're created by oil supply shock. 84, 86 happened because of extra oil supply in North Sea, Alaska, and Mexico. And 2014 happened because of, as everyone knows, US shale production. And the response of OPEC countries have been the same in this period, completely the same. They have focused on market share preservation, and they focused on continuing the production at the same level. But now, there's something else that's happening. April 25th, Saudi Arabia announced Saudi Vision 2030, right? So we'll get back to that. So yeah, what's the main reason for 2014-16 decline? Global economic slowdown, market share preservation, and US shale production. These three, of course, you can add political, you can add some other causes, but these are the three main, in our opinion. Now, what has been the Saudi response since we're studying Saudi Arabia? You can see from the graph that assuming the oil prices started declining from September 2014, you could see a huge bump. So they're producing around 10.2 million barrels a day. So the response was the same as 84, 86 area. And how much do you think the UAE produces? Any guess? 3 million. How about Kuwait? Stuff like that. How about Kuwait?
2.5, 3.
You're not supposed to talk now anymore. Just So how about US? There's a graph there. How about Russia?
11.
Very good. I told you, you're not allowed to talk anymore. Huh? 11. So Saudi is one of the top producers, very high influence in OPEC. Yes. Now let's see. I'm sorry for the detailed graph, but I like to point out what's happening in the Saudi economy currently. Just focus on this foreign asset depletion. Ignore the top. Just focus on this. So what are foreign assets? It's gross foreign assets minus the debt. What are gross foreign assets? Reserves, which is in central bank, gold, monetary system assets, and sovereign wealth funds. Sovereign wealth funds, this data is secret. Nobody knows what's going on. But SAMA reserves, central bank reserves, Saudi Arabia Monetary Agency announces their reserves, how much they have. So we know that. It's a public information. But sovereign wealth funds, nobody knows. And this number, a trillion, of around a trillion, or maybe 1.2 trillion, right around here. Again, an estimate. Nobody knows the real number. But we can almost surely predict the asset depletion, how much Saudis have used. In 2014, they're estimated to have used 134 billion US dollars. And assuming the oil price will be around 45 this year, average. By the way, what's the year-to-date average?
14. Depends if it's
Brent.
41?
No, 37. So assuming things will increase a little bit, so assuming we're at this column, Saudi Arabia is estimated to be running through 110 billion US dollars. So that's quite a bit. In combining 2 years, it'll be 250, yeah? I mean, 130 plus 110, 240. So that's a serious asset depletion. And assuming they had a trillion, 1.2 trillion beginning of the year, this is a serious number to consider. So, yeah, this is the Saudi Arabia Monetary Agency data, public data, which is available, and it clearly shows they have from the peak to down to here, 150 in 14, 15 months. So this is an alarming trend, but there are good news. There's good news. Yeah, look at the debt to GDP ratio. It was 1.6%, and it's estimated to be 13%. So Saudi Arabia can actually access the bond market, can actually issue bonds. So their debt to GDP ratio is very low. They can issue bonds, international and local markets. So they have many options. Yeah, again, it happened before. It's not new. It's nothing extraordinary. What happened in the past? They've slowly reduced the red line is percent of GDP, meaning the budget deficit, how much percent of the GDP it is. So if you see from here, they've gradually reduced their spending and came out of that 84, 86 oil price crash and the subsequent, the following 10, 15 years of decline. Now, April 25th, the famous Saudi Vision 2030. The main goal is, ideally, to Saudi to be weaned off slowly away from the oil sector, to be completely unreliant to the oil sector, and to outline the main statements of the. So, King Salman himself announced these main guidelines. So it could be summarized as government asset privatization. So Saudi hospitals will be privatized, airports, even Saudi Aramco, 5%. Eliminate government inefficiencies, reduce corruption, reduce redundancies, increase private sector contribution to GDP growth from 40 to... That's the most important, because in this sector, in this section, we are focusing on tourism, and they have literally said the same sentence: develop the country's potential and increase Hajj pilgrims from 8 to 30 million. So they have specifically mentioned tourism to be a key sector in Saudi Arabia's independence from oil, or less reliance on oil. Labor reform, there's an unemployment problem. They have to tackle that. Social reform, housing is an issue. They have to focus on housing. Visa process, they're thinking of issuing a green card for expatriates. And they're thinking of, again, allowing expatriates to buy property. Maybe just the last slide, just to show. This is this came out before the Saudi Vision 2030. It shows that the Saudi contribution, Saudi Arabia's tourism contribution to the GDP, and the direct labor contribution, direct and indirect, we'll talk about it. And just, we will shift through the slides, and then Mr. Costas, I will hand it to Mr. Costas, and then we will take your questions. Yeah.
Thanks very much indeed, Alp, for that insight. So we're going to continue this discussion now, but we're going to do it in a Q&A format. So Alp, I'm going to invite you to take a seat, have a seat, make yourself comfortable. I'm not going to be asking the questions today. We've got someone far better qualified than me to do that. He is the Vice President of Development for the Middle East at Marriott International. Now, began his education in a traditional Swiss hotel school, followed by master's degrees, and then a doctoral degree in the United Kingdom. His PhD thesis is in the area of real estate finance, specifically on hotel feasibilities and valuations. And he got that PhD from the University of Strathclyde in Glasgow. Between 2006 and 2012, he headed up Deloitte's hospitality and real estate consulting team here in the Middle East. So finance, economics, number crunching is something he's very, very experienced at. He joined Marriott 3 years ago, back in 2013, with a focus on the markets of Saudi Arabia, Kuwait, and Bahrain. Please join me in welcoming our inquisitor for the next 15 minutes, Dr. Costas Verginis. Thanks, Costas.
Good afternoon. Hi, Alp. How are you?
Fine, thanks.
I'll try to make sense of some of these very interesting statistics that you shared with us. The things that I took away, some of the key points, is it true that 90% of the Saudi government revenues come from oil?
Yes, that's correct.
That is a significant number.
That used to be the number in 2014, yes.
And now it's declining.
Now it's declining because of the oil price coming down, yeah. That's
And this is the money that is paying for all the government-sponsored projects in Saudi Arabia.
Yes, everything, 90%.
Interesting.
Yeah.
So I guess no money, less projects.
Projects will be postponed.
Okay.
Maybe non-critical projects will be delayed,
Okay.
focusing on critical, highly important projects.
Interesting.
Yeah.
Interesting. And if we look at the history, clearly this is not the first time that the oil prices have dropped. They have dropped before in the 80s,
Yes,
and they have recovered. They're dropping now,
yes.
and we begin to see some recovery, right? But we're not quite sure at what stage it will go up to 70, 90, or 100, right?
I mean, nobody knows exactly, but the trend is the average will be around 45 this year, maybe ending up in 50s at the end of the year. But like I mentioned in the graph before, we had a 10-15 year period of oil prices hovering around 30, 35. You could literally go into that 30, 35 range, or maybe 40, considering Iran coming into the equation. But now, this time around, Saudi government is going to be focusing on complete restructuring of the economy. Yeah.
I understand that, because the way I see it is that if the budget has a break-even point of $70, $75,
Yes.
Yes, there are reserves,
Yes.
so they can run a deficit, but for how long?
Yeah. Again, simple numbers. Saudi Arabia currently is hovering around 70, 75, like you mentioned. So in order to match government spending with government revenue, they have to have the oil price at 70, 75. Any other than that, they're going to run a deficit. So considering the asset graph that I showed you, 130 billion 2014, 110 2015, 15 and 16, they probably got 7-8 years, maximum 9 years, before they completely deplete their reserves. So 7-8, very realistic estimate, not pessimistic, realistic.
Which is not a huge period of time.
Yes.
Which makes Vision 2030 very, very timely.
Highly critical, very
Highly
timely.
critical for
Yeah.
this environment. I was intrigued by the three industries that were clearly mentioned there.
Yes.
Mining
Yes.
was one of them. Defense
Yes.
was very important, and tourism.
Tourism, yeah.
Clearly, in this room, tourism is the most interesting
Yes.
part, and we hope that tourism will continue to be a very important part of the Saudi economy.
Yeah, definitely. The Saudi spends a lot of money on defense, so they like to reduce that, and they have to create their own defense industries to reduce that spending. And also, Saudi Arabia does have a huge, like for instance, this Nabatean civilization that's in Petra, that we all know. Actually, the majority of the relics are in Saudi Arabia. So Saudi Arabia has a very strong untapped potential in terms of tourism. And then also the labor force is there. It's 22 million locals, 10 million expats. So labor is there, historic relics are there, there is religious pilgrimage. So Saudi does have a very strong, untapped, unutilized tourism sector.
Yes.
Yeah.
Religious tourism, obviously, it's the obvious one.
Yes.
The latest numbers I saw indicate an objective of increasing the numbers
Yes.
from 8 million today
Yeah, to 30.
to 30 million, which is
8 million by 2015 and to 30 million by 2030 in 15 years. Government is currently spending money on infrastructure for roads to facilitate the access. And then before, it's a kind of interesting, the Saudi government was not very reluctant to allow the tourists because they thought the tourists will affect the internal structure of the population. Now, religious tourism is very suitable for Saudi economy because, again, they're worried about the tourist numbers, but now this is religious tourism. So religious tourists are suitable, exactly the ideal candidate for a Saudi-based transformation in terms of reaching the 8 million to 30. And if the visa restrictions, the application process of visas are facilitated, are loosened, I think 8 million is not a big number even today.
No, it's not.
Yeah.
No, it's not. And you're right, the infrastructure is coming, the airport in Jeddah, the train connection
Etihad
from
trade
Jeddah
rail,
to Mecca and Medina, and of course all the other projects in the two holy cities themselves. In terms of other industries, such as mining and defense,
Yes.
Clearly this will open opportunities in other cities in Saudi Arabia as well,
Yes,
right?
yes.
And by other, I mean outside Mecca, Medina,
Yes.
Riyadh,
Yes.
and even possibly Jeddah, right?
Yes, for sure.
So you see opportunities in the industrial cities or perhaps in the north where mining is
yes,
likely to be explored further?
So as we all know, when you establish a city like King Khalifa city, finance city, subsequent industries develop around it. So if you establish a mining city or a mining center like the one established in Kazakhstan, you will clearly see like a mushrooming of other sectors. So there will be need for hotels, schools, hospitals. Mining and defense industry, mining, defense, and tourism focus it shows the Saudi authorities' real intention. And actually, these three, especially tourism, shows the great potential Saudi does have.
That's very good.
Yeah.
So clearly potential for religious tourism,
Yes.
business or corporate, and to a large extent leisure,
Leisure, yes.
if the visas open up for culture, etc.
Visas relaxed a little bit, not so strict, so many documents required and all that.
Sure. I was also intrigued by the data you showed about employment, which I guess is linked directly to the GDP contribution. Big country, 25 million population.
Yes.
Currently, the direct employment in the hospitality and tourism is relatively small.
Yes,
if I remember your numbers, it's
850.
close to 850,000
Yes.
people. According to your predictions, forecasts, this will increase to 1.3 million,
Yes.
which is clearly important in an economy of young people.
Of young people, yeah. So let's give a simple number. Saudi Arabia is estimated to have around 31 million people right now, 10 million expats, 22 million locals, and with the local population around 12% unemployment. And the current level of direct employment by tourism is 850, and the projected estimate is around 1.3 million. So assuming, when you establish there is a hotel, you need to establish schools for the staff, so direct and indirect. It's not a clear term to understand, but direct and indirect employment can easily sum up to double the number that I've mentioned there. It was mentioned as 1.3 million, so you could easily assume 2.5 million, 2.6 million tourism contribution to the labor sector, and this will clearly reduce the unemployment rate. unemployment rate of 12%. That's a major concern for Saudi officials, and they're really focused on that. And also they're focused on engaging women into the labor force.
Correct.
So again, I believe females are more suitable for, again, tourism sector, more patient, more relaxed. So tourism sector is clearly going to tackle the unemployment issue, which of 12%, and it will be a very good venue for the females to be employed.
Very good. And that would also mean that the tourism contribution towards the GDP will increase from 2.5% or thereabouts to something higher.
Yeah.
And if I remember another presentation, the global average is approximately 10%.
10%, yes.
So there's clearly a gap there.
Yeah, so again, the World Trade Tourism Council estimates that there is a global slowdown, that's for sure, but the tourism sector is far outpacing the global growth. And again, by VTTC, the tourism sector contributes 10% of global GDP. Currently, Saudi is around 2.9%. So they're a bit behind in terms of global average. And with the new initiative, that contribution will definitely increase. And I mean, the numbers are not out there yet, but the 2020 vision, 2020 numbers around 3.5. So by 2030, maybe we could expect 5%, 5 to 6%. We never know, but definitely we should remember that tourism growth is going to far outpace global growth. So if you're going to be worried about global growth, okay, be worried, but focus on tourism.
That's a very interesting point. So if I was to take this from the macroeconomic level and bring it down to the average investor here,
Yes.
You work for a bank. So from a bank perspective, is investing in the Saudi hotel market, hotel industry,
Yes.
Perceived as an opportunity? Is it?
In terms of
Looking
FDI, Saudi is the third highest recipient in the region. Turkey is number 1, UAE is number 2, and Saudi. Right now, with this new initiative, 2030, I believe Saudi is the right place at the right time. So for an investor, I think it's the perfect location because now they're really focused on tourism. If I had some money, would I invest in Saudi hotel sector? Yes. If the focus is so much on tourism. But I'm a researcher, so I don't have that much money. I'm behind I'm behind closed doors. I crunch data.
You have the insight, which is very, very useful. Good. I would like to open the floor to some questions from the audience, please. Do we have any microphones? The gentleman over there, to your left.
One here, and I think there was another one over there.
Thank you. On the question of tourism, I can see Saudi being a huge market for outbound tourism, as in Saudi starting to traveling within the GCC and further afield, rather than inbound tourism into Saudi Arabia. So from an investment perspective, should I invest in Saudi, or should I invest in product that's geared towards the Saudi market, maybe within the wider GCC region?
Well, Saudis are, we know the numbers. Saudis are biggest investors in real estate in Dubai. And also, in outbound market, Dubai is the highest recipient of Saudi travelers. But now the focus is shifting. Now they're focused on, if you think carefully, the per capita income. The people are having less to spend now. So they'll be focused on internal travel. So yes, domestic travel numbers are going to be decreasing because less money to spend. External travel, outbound tourism, will be again a little bit less. But now the focus is on importing tourists, not exporting tourists.
And if I remember correct from your last slide, the numbers for domestic tourism are increasing significantly, which would suggest that a lot of the local families, people, instead of traveling abroad, will stay within the kingdom,
Yes.
assuming that the hotel products are in place. Any other questions?
Hi
Hi.
there. Fran Hughes, International Tourism Partnership and the Youth Career Initiative. And we're delighted to be sponsored by Bench Events for our Youth Career Initiative. It's a program which brings young people into the hospitality sector, working with the global brands, and we'd be very interested in seeing how Youth Career Initiative can partner with the Tourism Commission and businesses in Saudi to deliver the program and bring young people into this fantastic sector. I was hoping actually I might get a conversation with Dr. Al-Badra about this as well. Waving over here. So I'm not sure if that's a question or a statement, but
Okay.
I'd love to open that conversation.
I'm not an expert. I am familiar, though, with a department of the Ministry of Labor called HRDF in Saudi Arabia that is very, very keen to promote employment within all sectors, including tourism, and I think that would be a good link. You're welcome.
Thanks very much indeed. I think on that note,
Last
we'll
question.
have to leave it. We're out of time, so we're going to have to wrap it up there. But we can take these conversations offline. I promise you these guys will be available to take questions very, very soon. Thanks very much indeed to both of our panelists, to Costas Verginis. Thank you very much indeed for being the Inquisitor, and also to Alp Ecker. Thanks very much indeed. Appreciate your time today.
Thank you.